But usually this is the time of the show where we would have Nimesh right next to us, getting us an insight into the dealing room chatter. But as we speak, he is at the Kotak conference itself, and he's speaking to the dealers, etc., and everyone who's attended that conference to give us some more insight in person. Nimesh, what's the mood like out there? What are the traders, dealers, investors, the participants, so to say, saying?
I'm Mangalam. Sometimes it's good to do a ground check, and that's what exactly I'm doing. I've met a few investors before this link, and I'm going to meet a lot of them after 5 p.m. as well. So broadly, the sense is India has been a market to track from a medium to long term, but in the near term, I guess there are other compelling markets which are doing good. So that's the first level feedback that I've picked up. In terms of today's trade, I guess the expiry-led volatility is clearly playing out, so that's something to watch out for. But unlike yesterday when there was panic, in terms of unwinding, that doesn't seem to be the day today. So a bit of calmness is what I understand. The trend for the last many days has been the FI support, not only large selling, but a bit of buying as well. So that's been the trend today as well. So again, the feedback is the flows are mixed from the larger FIs. From a technical point of view, 17,500 is a very crucial support on the Nifty. We're just hovering around those levels, so that's something to track. If that gets taken out on the downside, then maybe gates will open up for 17,200. That's the overall feedback from a technical point of view. The other important feedback is, Mangalam, there was a lot of margin-related crisis for the last many days at the brokers level. That seems to be have resolved slightly. That's the overall feedback. So maybe the feedback is that coming post the expiry, you will see some bit of volumes picking up and some bit of activity back in the broader markets as well. So that's something to track in the new series. Broadly, on expected lines, we expected volatility, and 17,500 is acting as a strong support on the Nifty.
It indeed is, Nimesh. Thanks a lot for that. In fact, that you spoke to a lot of people. I wonder whether you got any sort of individual stock-related khabar from there or not. What's on your list today?
So in terms of individual stocks, the first stock on my list today is Zee Entertainment. That's been a big talking point throughout the morning as well, and I know that's been a big volume stock as well. I understand, the intraday dip when the stock was down almost to 12-13%. That was when some of the larger HNIs, some smart HNIs, and some domestic mutual funds has bought into today's weakness. So hence the volumes are on the higher side on Zee Entertainment. So that's the first stock. The second stock is Sterling and Wilson. Again, a quiet stock, not much been done in the last many quarters now. Small accumulation has started in this particular stock at a leading FI desk for the last couple of days. So the delivery volumes are quite high in Sterling and Wilson. And there is a buzz of a large, company getting a large international order very soon. So that's something to track in Sterling and Wilson. The third stock is GAIL. We highlighted since morning the CLSA report as well. So the stock is buzzing on the back of that report. But contrary to the report, today for a change, there is selling pressure at the leading FI desk in GAIL. So that stands out. And the last stock is Data Patterns. Again, a stock which has done really well in the last many months. Quarter 3 was very strong for the company. And the overall feedback is that maybe at these levels, you're going to see a fundraising from the company very soon via QIP. So that's the reason why Data Pattern is in my list as well.
Okay, got that. Yeah, I think that CLSA report was very optimistic on GAIL. They were talking about a huge amount of tariff increase. Makes it to Nimesh's list as well. But thanks, Nimesh, very much, and we hope you have a good rest of the